is your money, man? I win.
You're so lucky.
I know, I'm lucky, but maybe also because I expert this game. So since I have the money now, what is your suggestion then? What should I put this money?
I know a few guys. Actually, one of our friends is working for a security company.
Really?
Securities, yeah. So you can purchase stocks if you're interested.
Stop boring.
What about commodities?
Oh, that's a good idea.
You heard of that?
Yeah.
I'm actually started just investing a little bit of money.
Oh, that's good.
Yeah, they say the return is good. I'll tell you what. I'll call our other friends and I think we just go to evening and we discuss. I think there is also a good book about that.
Okay.
If you want, let's just call the other guys. Yeah.
Okay. Welcome back again. So let's continue our conversation last night. So you know guys, actually after we finish our game,
Yes.
and then when I get home, I'm kind of fresh, you know, and then I found this book.
Oh, it's about commodities, right? From Jim
Commodities.
Brothers.
Nah, and then I got something in my mind actually. I'm thinking to put my money in a hot commodity. In a commodity, not commodity.
That's so hot if you read this book.
Have you read this book or not?
Yeah, already
Already.
So Bu Azima, what do you think about this author, Jim Rogers?
I think Jim Rogers is a kind of a tough guy.
Mm-hmm.
Even though he grew up as a poor kid in Alabama, but in 37, I
Yes.
think,
Yeah, he
37 the age, he had booked his fortune with enough money.
Oh.
Wow.
Yeah, of course he had got well educated in Yale and of Oxford.
Oxford, yeah.
Oxford
Oxford.
University.
Yeah,
that's
yeah,
right.
Yeah.
He got to with George Soros make some company, so he
Yeah.
get
Oh, yeah.
Really?
I think
many money from there. So
What kind of companies?
That's called quantum.
Oh, yeah.
That was
yeah,
back in
yeah.
1973.
Yeah, I know that.
I think that's how he made most of his fortune.
Mm-hmm.
Imagine at 37 years old, he
yeah,
retired,
retire early, you know.
Wow.
travel around the world. So.
Damn, I want it like that.
Yeah, me too, of course.
Okay, so that means people can actually make a living from commodities.
Yeah.
So it's not a bad idea after all, I guess. So if you got too much money now, invest in commodities rather than just stocks or anything else. So diversification is the word, I guess.
No,
Because when I read this book, the Jim guy said the next bull market is here. You know, it's
Yeah,
not in
yeah.
stocks, it's not in bonds, but in commodities.
Commodities, that's right. That's right.
And the commodities is surround us.
yeah.
Yeah.
But
Yeah.
for the first of all, we should make what kind of the book?
Basically, this book is sharing us that one of the investment way that we can do, besides putting in stock, property, or anything else,
Okay.
we can put also our money in a commodity. Why? Because Jim said in here, because like Ibu Azima said, commodity is essential for everybody. Every day, every time we look on our commodities. I mean like gold, rice, sugar,
Coffee.
coffee, and then wheat, soybean, many things. So
Yeah.
our life is really related to commodities.
So basically, we cannot live without commodities around.
Correct.
Yeah, everyone is need for that commodities
They
like coffee. They need.
Yeah, I love coffee.
Yeah.
And also gold.
Yeah.
Yeah. So
But funny enough, in here, gold is not considered as investment, but more as assurance. I think
Yeah.
it's somewhere
Yeah.
in the book it says about that as well.
Long-term investment.
it's long term, but there are some demanding for demand and supply for
Yeah.
the gold. I
They
see.
say gold, it's probably we jumping around, but gold, they say it's oversupply.
Yeah.
Gold cannot vanish.
Yeah.
So basically, once it's dig up, it will stay somewhere in the
Somewhere
world.
in the
Yeah.
world, yeah.
So unlike coffee, for example, you drink it, it's gone.
Yeah.
Gold stays there.
Yes.
And you know the basic what you call important factor when we play like in commodities is simple actually. It's just a supply and demand.
Yeah.
But to understand the supply and demand, we have to gather all information from many sources. What is mean with supply and demand? So we can somehow understand when supply is high, this means the demand, the price will go down,
Yeah.
while the demand is increase. The price will increase.
There was a very good example, Mr. Anang. I think I'll give an example. For example, oil. We haven't discovered any major, oil mining in the last 35 years. So imagine, so the supply and demand was kind of contradictory. For example, the supply in 2006, it was 85.5 million barrel per day compared to the demand, which is only slightly down 84.5. So the
that's mean
demand
that
was less,
Yes.
right? So it increases, it pushes the price up. Unless the demand is equivalent to the supply, then the price will still always be bullish, I guess. Yeah.
But I still don't understand about how to invest in the commodities compared to the stocks.
I think there are a few ways of doing it. First is you can buy shares in a company.
Okay.
They are producing commodities products.
And then
Futures, you can make a trading in the futures. You can play gold, coffee,
Yeah.
everything else. So it's all there. What else, Mas Tanang?
There are two other things that you mentioned. We can also invest in the real estate or property next to the company that produce commodities.
yeah.
And then the fourth, we can invest in the country that have a big supply of commodity.
Yeah, I guess I read already about the James Rogers he published a book like Bull in China. She said that the potential in that country is good. It will be in the future. It will be a bull market in there.
Yeah, because I think in the past, China used to import
Yeah,
things, right?
yeah.
But now they're
They're
exporting because
exporting it. A lot of commodities there.
commodities are coming there. Population is a big factor.
Yeah.
Population.
Earlier we talking about how, the relationship between the commodity and stock. So this Jim has been somehow has been experienced, has been tested. So he has the hypothesis that actually the stock and the commodity has a negative correlation.
Yeah.
So what does it mean? Mean that when the stock go down, the commodity will up.
That happens in 1966 until 1982, if I'm not mistaken. Yeah.
Correct.
So when the
Correct.
stocks were very low, commodities was actually booming.
Correct.
Yes.
Yes.
So that's a proof of a negative correlation.
Yeah. And it's not only that even. In fact, there are 3 even actually from the 1966 until even 2014. So to be exact, from 1966 until 1982, like you mentioned, the stock market was crash, and then the
Commodity is
commodity
boom.
is boom.
Yeah.
Yeah.
And then the second, from 1992 until 1999, the stock market was a start, but the commodities was not.
Very down low.
Correct. Then after that, from 1999 until now, that's what Jim Rogers said as a bull market.
Yeah.
Maybe anyone can have idea
So
how this can happen? This negative relation between the stock
so
and
that is about
That's my question.
17 years.
correct. It's 17
Yeah, the bull
years.
market lasts for
Every
17
17
years.
Correct.
But we can understand the inflation is how the inflation is down and how the production cost is low. It's impact to everywhere.
But I still confused about the negative correlation between stock and the commodities because is it the two kind of the different way if you say is it the negative correlation, so everyone can
I think I will try to answer Pak John question about what is actually the negative correlation about stock and commodity, because if I can imagine, that when commodity price is low, everything, the cost of production is low. For example, when the fuel price is low, fuel is a commodity. When the fuel price is low, inflation is low, and then all the cost of production is low. This make the profit of the company is higher because with their fixed price while the production cost is lower, they can get better profit. What they call a different situation when the commodity is up, the price is high, making the profit of the company is small, actually it's less.
Oh, okay.
Smaller than
I
that.
understand. That's why he does not actually recommend us to purchase stocks in commodities, but might as well just jump into the features of commodities directly, because when the commodities price is going up, for example, the stock market, maybe going up as well, but the raw material is costing you more. So the profit of the company is actually less.
Yes.
Yeah.
But, I agree that, but I think it's with the assume that the revenue is the same, because
Yes.
we just only look at the low or high cost only, but you
Yeah.
have to see the revenue,
The
the
revenue.
impact of revenue. I think the James said that if the assume of the revenue is still the same, so we can see the correlation, the negative correlation between the stock and the
And the commodities.
Yeah.
Yeah.
It's quite unique point of view because it's less risky than stocks, as we
Yeah.
know. And then even we can start in a small amount of money. We don't have to deal with a lot of numbers of money. So I think it's good for us as a beginner. Nanang, as we know, you've won quite a money, so I think it's a good start.
But the book is quite just following what you say. It's about debatable. A lot of people say commodities are actually riskier, but Jim, for some reason, he says that commodities actually
It's more safe.
yeah less riskier.
But the James Rogers said too, but if you change your mindset and you take the terms is in the long terms, the commodity is quite good for the investment.
Yeah.
But in the short term, I understand.
Short
because,
term, yeah.
because the market of the commodities is depend on government policy.
Yeah,
depend
exactly.
on the weather.
It's depending on a lot of factors.
Yeah.
My personal opinion, I think he is similar to Warren Buffett. Warren Buffett
Yeah.
stock in a very
Very
long term,
long
Yeah.
term.
not short term.
Not short term.
So I think commodities, from what he says, short term is not recommended. Long term,
It's
that's recommended.
recommended. Yeah.
Okay.
So any other conclusions probably about the book, whether we should purchase commodities or we should
Yeah.
learn first in detail?
So what is your opinion? I mean, will you recommend this book to your friend or to somebody else to read
As
this?
an
As a
alternative,
beginner,
beginner, because the book is very easy to read, clear directions. It also outlines some of the technical skills and details as well. So if
Is it good for us to try to play about the commodities?
Why not?
Despite of the,
Interestingly, Jim says that even this year, still part of the bull market until
Yeah,
2016.
until 2016.
Yeah.
Because there are time that in China is to take a lot of expansion in the world, in international market. So
Yeah.
China is the best way we can investment in commodities.
But one thing that I mean, maybe I don't know whether this somehow is contradictive what it say in the book. You know, gold price now.
yeah,
Gold price is going down
going
now.
down.
It's
Yeah.
going down.
So
It's below
do you
20.
think why the gold price is going down? I mean, it's not really like what Jim said. It's kind of like a bull
Yeah.
market.
He says that you should not look on commodities at one sector. So, for example, gold up and down, but
Yeah.
as a overall market, you should compare it to for example, lead, coffee, and everything else as well.
Yeah.
Yeah.
So you should not focus on one part of a commodity also only, but
The whole.
in general.
In the whole, in general.
Yeah,
Yes.
We cannot look at specific just one, but we can what is called this varsity.
Diversification.
Yeah.
So that Rogers make RISI,
Yeah.
That's an index which captures 36 commodities right
Types
around
of
the world.
commodities,
Yeah.
But remember, Mas Nanang, before you invest in gold, if you want to go with what he says, gold is for assurance, not for making
the-
money or investment.
Yeah. I think for gold, for instance, because what I read, one of the what do you call the biggest consumer country of the gold is India.
Oh,
Yeah,
yeah.
But what I found, the India economic now is not really
Not
good.
really good.
So somehow the demand of gold from India also decrease. That's why somehow this impacting to the gold price around the world.
I think that for the gold, you can see do you know, Ibu Azima, when you buy something like the accessories, right? Compared to the 10 years before and now, it is the price is very high right now, right?
Yeah.
So I think gold is for the long term investment. I think it's good. Yeah.
But one thing though, what is not really clearly mentioned is that when should we go out? When you invest in commodities, because you're not gonna put your money there and leave it forever, right?
Yes.
So
Yeah.
you have to know when to go out.
Before we are talking about how to exit the market.
Sorry guys, can I
Oh,
just take this?
okay.
This is from my dad.
Okay, let's say I mean that I just want to.
He's talking to his.
Sorry,
Oh,
just one
okay,
second.
okay.
I'm actually at me. Yeah, we just discussing about market in commodities and all that. The author, we're reading about the book. The author, Jim Rogers. Okay. Seriously? Hey, just 1 second. I think my dad knows Jim Rogers.
Wow. Really? Seriously?
Okay. What a coincidence.
Yeah, maybe your dad can arrange for us to meeting
Is
with
it-
the Jim Rogers.
Okay, is it even possible if we meet this guy? Just 10-15 minutes is fine.
Yeah,
We just
yeah,
wanna ask.
We will buy him dinner. Don't worry.
Dinner on you, yeah? Okay.
On us.
Okay.
On you.
Sure. Tonight, are you free? He doesn't have a lot of time. This guy is
Okay,
busy.
tonight. Okay,
Tonight seems good.
Yeah.
Okay. Tonight, yeah, 7 o'clock.
Let's get drunk again.
Okay. Thanks, Dad. Bye. Man, what a coincidence.
Good.
So we can meet this guy.
So lucky you.
You have questions?
So, yeah.
Save it for him. Don't ask us. So just ask him.
I think it
Okay,
was a good discussion, guys.
Yeah.
Since now it's already
Hey, man.
5:30.
5:30.
We have catch up the meeting with
Jim
Don't be
Rogers.
late. That this guy is very important. John, don't be late. Okay. Shall we?
See you in the
Okay,
dinner.
See you.
See you guys.
See you, bye-bye.
Bye. Sorry, I'm late. Okay, so
As usual, John.
okay.
Hi guys.
Hey, the girl, very beauty. Yeah?
Sorry, Jim Rogers can't come. But he will be happy to see you on Skype.
Okay.
And who are you?
I am executive assistant.
Of Jim. Arya, you wanna take it?
Your name?
My name is Putri.
I'm Azima. Nice to meet you.
Nice to meet you too.
So how long?
I think these guys already. They want ask some questions. Okay.
Okay.
Hello, Jim.
Hey, Jim. How are you?
Hello, Mr. Rogers.
Okay, Jim. It really is unfortunate that you cannot be here, but it's okay. We appreciate your time to talk to us, although it's via Skype.
Yeah.
But it should be quite good.
We're
We just-
grateful to see you in
Skype.
yeah,
Skype.
in
Email
Skype.
and Skype, yeah.
So can I ask the first questions?
Sure.
Okay, Jim. I want to ask something about commodities. Why we should put our commodities in our portfolio?
You can make a lot of money in commodities if you do your homework and if you're careful and if you invest properly. You know, the study you yourself referred to showed that you would have made more money in commodities in the past 50 years than you would have made in stocks and bonds, and you would have done it with less risk, less volatility, and a better inflation hedge. You know that as well as I do.
I
You're
understand.
the man, Jim. You're the man.
Yeah.
But I have another question.
Oh, okay.
How do we go to exit
Yeah,
from the...
That's actually
commodities?
one of our questions during the discussions, right? We
Oh,
don't
yeah.
What
Yeah.
the
exactly
climate
know.
shit, you know?
Yeah, exactly when to exit. Probably a simple questions or example in sugar and copper market.
Everybody knows something about sugar. Everybody watching this show knows something about copper. So start doing your homework. Find out the supply and demand. You can buy companies, you can buy futures, and futures are not nearly as dangerous as they're cracked up to be. I try to explain that in the book.
So, based on what you state in the book, you say that commodities can, to some point, be better return compared to stock market.
Okay.
Is that true? And how does it work actually? Is it still a risky business, for example? Because people have assumptions here that commodities are actually riskier than stocks. But you said the other way around. So next explanation is a simple one would be good.
That's exactly it. That's why we have a new bull market in commodities. In the 80s and 90s, everybody was buying .com. Everybody was blah, blah, blah about stocks. Nobody was investing in productive capacity for commodities. There's been one lead mine opened in the world in the last 25 years. There's been no major oil discovery in over 35 years. Oil wells deplete. The production in Alaska is now in decline. Production in the North Sea is now in decline. England has been one of the great oil exporters of the world for 25 years. They're about to start importing oil. Karen, we're running out of this stuff. That's why we have a bull market. This is not rocket science. I'm not very smart. It's supply and demand, and it's simple history.
You guys happy with what
Yeah,
good, yeah?
Thank you.
It's a good conversation with Jim.
We really appreciate your time, Jim. We know you are a very busy person.
Yeah.
Appreciate your time. So
But it's,
probably next time if there is another time.
If you come to Indonesia, you will.
So happy riding bike again, Jim. See you again. But please, we would like to keep your assistant.
Yeah, is it okay for you, Jim?
Okay, Jim.
Okay,
Bye-bye.
bye.